Hello, it is now Sunday, July 19th, 2020. It's been a very volatile week as expected and as per usual in the past few weeks and months. As the market we saw went up and down all throughout the week. Few very interesting earnings reports. Yes, I'm gonna go ahead and continue with the stock, some stock analysis. So we'll pick another stock at random. 100% randomized. Ooh. Beyond Meat. A lot of green logos. Beyond Meat. Interesting. Recent IPO. Lots of publicity, mostly good news. Should make the vegans happy. Beyond Meat. Stock ticker BYND. Wikipedia has them as LA based, but they're actually headquartered in El Segundo, California.
Left my wallet in El Segundo.
They make plant-based meat substitutes. Ethan Brown founded the company just over a decade ago, and he says that it was actually, he had some haters. Even people weren't believing in his company initially, and just didn't believe in its success that it would have. So Kleiner Perkins was one of the very early investors. Even Bill Gates has shown interest in the company, as well as Tyson Foods, who at one point had a stake in the company, and they liquidated their stake prior to the IPO just last year. But yeah, they make vegan meat substitutes which have pea proteins, rice proteins, mung bean, canola oil, coconut oil, etc. Back in 2013, the company started selling their plant-based chicken products in Whole Foods, who is now owned by Amazon. And once Whole Foods started selling it, more and more restaurants and grocery stores started to jump the bandwagon, which drove sales up drastically for the company and just gave them more publicity and prominence in the food segment. Here we can see some of their largest partnerships, and this is just as of July 2019, from Business Insider. So KFC, who's actually been a recurring partner, they had some recent news they just announced as well. Subway, Dunkin', and Dunkin' brand is actually the first United States restaurant to sell their Beyond sausage just a year or so ago, and more companies are jumping on the bandwagon with that as well. Blue Apron, who's had some recent upside thanks to COVID. Famous Dave's, Tim Hortons, based out of Canada. Of course, Del Taco, A-Dub, TGI Fridays, and Carl's Jr. Lots of fast food restaurants and some big chains as well. So here on their website we can see some of the restaurants and stores that they're promoting, that they have partnerships with. A lot of the big names that we already sell, Target being, and obviously Walmart being the hugest names on this list. You can just browse. They have a very clean, beautifully made website. And they have some pretty big name partnerships as well, celebrity endorsements, as you can see, Kevin Hart being one of them. They have a lot of athletes as well. We can start in the fundamental analysis. So Beyond Meat, on Friday it closed at 128.27, down, actually it was pretty much flat on the day. You can see the range, it pretty much closed in the middle. 52 weeks, sort of kind of close to the middle of that range. Pretty high volume, just over 2 million shares Friday, averaging about 9.5 million, so nearly $1 billion worth of shares traded daily. The market cap has got them at about 8 billion. They don't have a beta for some reason. Well, I guess they haven't been on 5 years on the markets yet. Earnings per share is negative. 1 year target estimate is slightly down from what they're at now. See, as we mentioned before, KFC is a good friend with them, and they're definitely investing in Beyond Meat chicken, as they do see it to have lots of potential in the near to distant future. Here we can see a chart. We can go back to when they IPO'd. Here back in May at $60, and the price skyrocketed just within the coming months up to over $200 a share. And it looks like it hasn't recovered back over 200 since July of 1 year ago today. And then it peaked. So that was its peak, and then it troughed at around in the 70s, and then COVID hit. It went to the 50s, high 50s. Now it's settled down in the 128s, but decent volume. Looks like it gets lots of volume on heavy volatile days. Yeah, we can see their market cap is dropped drastically since the COVID's been hitting, but I definitely expect them to recover once COVID is settled out. Positive forward PE ratio, very flat to even profit margins, but their op margins are positive, so that's a good thing for a company that's only been in the public markets for 1 year. Revenue growth is huge. That's an unreal number to see, double the revenue year over year. So you can see they have vast growth, and they are making some really strong connections too with some very valuable high-end companies. They do have cash on hand, some debt, book value is positive, so that's good. And then you can see their operating cash flow is a bit down. Float is 42 million out of shares outstanding 62 million, so that's a decent high number. 18% are insiders. No dividends, but I would definitely like to see this company pay dividends in the next anywhere from 3+ years once they start making the consistent profits. Down 22% on the year. So the S&P is beating them on the year, but they are an IPO which has high volatility as expected. So you can see here's their main insiders. Over 400 employees. Not sure if that's accurate. I would assume that it's definitely fluctuated as of recent. So yeah, their founder and CEO makes just under $1 million. Here's their general counsel, makes almost $500,000. Here's where they're based out of. One thing I wanted to mention was so they IPO'd in May 2 of 2019, and there's something called a lockup expiration period, which is 180 days after the IPO. The insiders are allowed to sell their shares for the first time in open markets, and they actually reported earnings right around that time too. So on October 28th, they reported profit of 0.06 cents per share, and I remember I was trading options on it, and I expected them to do good, which they did. They reported a profit for an early company in the IPO timeline. That's pretty good. But I remember, because it was a lockup expiration time, the next day or around the next few days they went down about 20%, so the price went way down. You can see that drop right here. That was this week, pretty much the last week of October heading into November. They were hit by that lockup expiration. So be wary of trading around that 180 day after IPO time frame, because it could be very volatile, and typically for the worse. Doesn't necessarily mean it's long term, but it's a short term volatility tendency. to happen. We'll check out their financials. So here's their income statement, and as you can see, humongous growth from 16 mil 4 years ago to doubled to 32.87, and 2 years ago, last year, they brought in nearly $300 million, more than triple their top line, with their cost obviously going up a ways, and their gross profit, they're definitely getting vastly improved top line numbers. Net income is kind of fluctuating. They're losing about 12 to 30 million dollars a year annually for the past 4 years. But as you can see, they have had a few quarters where they brought in net income. So looks like they're fluctuating up and down on net income wise quarterly, but they're improving as time progresses. As you can see, this is a beautiful graph right here where it shows just how drastically their top line growth is, and then the fluctuations quarterly. Check out their balance sheet. They have $400 million of worth of assets, which again, huge growth. It almost seems like they're growing too fast. And then their cash flow statements. As you can see, cash flows is slightly down, looks like down each year, but you know they're putting heavy investments into the product. So, and then negative cash flow, which is growing. Negative free cash flow, which is getting worse. But I don't necessarily expect that to be a bad thing for such a high growth company. Here's some Seeking Alpha analysis. We'll check out their peers on this page. So of course Tyson Foods, as we know, once owned just over 5% of Beyond Meat, but no longer do they own that percent. Nestle and Maple Leaf. See, all consumer staples, packaged meat and foods. Beyond Meat has actually surpassed Maple Leaf in terms of market cap. Nowhere near the value, though, of Tyson or actually they could surpass Tyson in the near future, but nowhere near value of Nestle. They actually have the highest 52-week high compared to these peers right here. PE, very high, because they're a growth company. Revenue growth is destroying the growth of all these other companies, so that's why they have so much potential in the near to mid future, and they could become just a powerhouse if they can continue to make the right connections and just compete on a very strong basis. Margins are very good compared to their peers. Year to date looks like everyone's down except Nestle, but Nestle does have the benefit of being a very well diversified company. So that's one thing that Beyond Meat's gonna have to think about. Are they gonna be forced to diversify to be able to compete with their competitors and stay a strong company for the long term and outlast their competitors? Revenue, yeah, nowhere near their competitors, but I expect growth every year for a long time unless something drastic happens in the industry or to their company. They actually have a lot of cash on their balance sheet, only almost half of what Tyson has. One of my favorite sites to do analysis, FinViz. Here you can see that chart again, and here's that 180-day lockup that I mentioned earlier, that big drop. As it's fluctuated up and down, it looks like it's on an uptrend since the COVID hit, where it took that big drop. It's already recovered past that, but again, it hasn't recovered at its all-time high. So it'll be interesting to see if they can get to that peak before the year end. So earnings per share, obviously people expect them to be profitable in the next year. Almost $4 per share. Here's over 470 employees. Looks like it's at about middle between buy and sell. A lot of hold analysis on it I've seen. And here's some of the recent analysts, what they're saying. Citigroup, who actually said, this is interesting. Citigroup called this, they just a week ago gave them a sell rating because it looks like they're saying competition, and they say it could, quote, be a fad, which is very controversial. I'm not sure if I necessarily agree with that. And here you can see lots of insider activity, mostly exercises and sales. Not on this page, not seeing any buys for a while, looks like. Going back to November of last year. Doesn't mean that there hasn't been any, just FinViz hasn't shown any on this page. And then here you can see some of their list of all their products that you have seen or will see in the future at your local supermarkets or restaurants. Here on MarketBeat, we can see, as I said, they're sort of in the middle of their 52-week range. Volume isn't as high as it has been in the as of recent, and then you can see there's definitely growth expected for earnings in the future, where the average in just a year and a quarter from now, people are expecting to make over 20 cents a share average. And here you can see their earnings by quarter in the past. So as you can see, the revenue growth is nearly doubled annually, and almost every single quarter except that most recent quarter was slightly down. Their GAAP EPS is actually profitable in 4 out of the last 5 quarters. Here at MSN Money, I mainly like this site because it has some good little news tabs and analysis, management effectiveness, and you can see income per employee. I wish that this would show their profitable quarters, but you can see negative $34K per employee, and as we know, they have about 470 employees as of per the other resources that we checked out. Here's the industry. Let's check out their competitor, Tyson, just out of curiosity. So they actually have 15K per employee, which is actually a kind of a low number. That 15K per employee is something that you'd see at like fast food restaurants. So I'm very interested to see how Tyson's gonna be changing up things at all to be able to compete with Beyond Meat, Impossible Foods, and some of these other plant-based companies that are entering the markets. Here's tip ranks. If you don't have a free account, I'd recommend making one. I'll leave a link in the bio for the website. But yeah, they're pretty harsh critics, so for underperform is expected for a recent IPO who's fluctuating on their net income from positive to negative. Analysts are having, looks like, mostly negative analysis. Bloggers are neutral. Hedge funds are increasing their holdings as of recent. Insiders have been selling because they want to take that paycheck. Check out some analysts. Looks like vastly different opinions, but more on the downside, looks like, by about 12.5%. Then check out insiders. So lots of, looks like fluctuating, mostly uninformative. Here's a huge sell right here. Uninformative of 10 mil, another 10 mil, 12 mil, 43 mil. So these people are taking their nice little paychecks. Here we're on Zacks. Here's some more of their peers or competitors. Some big names I'm sure you've heard of: Hormel, Pilgrim's Pride, Sanderson Farms. Then you can see, I thought this was interesting, their growth rates. Next year, 528, compared to the industry only 12, and the S&P they actually expect to be down 2%. So there's definitely high hopes, but they do have some haters out on the streets. Here we can see some really good analysis thanks to CNBC. So yeah, they were down by about $10 on the week. can see, here's the breakdown of the top shareholders. Looks like majority is held in North America. And then here's some of the largest institutional holders. Number one being DNS BYMT LLC, who is actually a very early investor and believer in the company from when they initially started over a decade ago. Here's some of the top mutual fund holders. Looks like Vanguard, one of the biggest names in the entire world, being the largest holder mutual fund wise. Here we'll check out their social media presence on good old Twitter. And to the here will be some Kyrie Irving play, as obviously one of their brand ambassadors. Probably one of my favorite NBA players as well. Anyways, so yeah, here's on their Twitter page. Looks like they have just over 100,000 followers. Following 600, yep. Joined in May 12, so almost 8 years. You kind of want to see more following, bigger of a following than that. So maybe they need to step up their social media presence. And I'm not one to judge, but I'm just saying there's way more companies out there that are easily over 1 million, and they've been in Twitter for almost over 8 years now. Regardless, so here we go. Yep, here's their huge KFC partnership deal. Pinned tweet from a couple days ago. Getting some decent volume and feedback. So one good thing is you like to see engagements on your social media profiles. So they do have a decent engagement, because I've seen companies that have as big a following or vastly more but has no engagement. So it looks like their followers are caring and do have interest in the company. Let's check out some of their competitors. Wow, so they have way more than Tyson, who's been over a decade. So yeah, Tyson's kind of slacking. They may get overtaken by BYND if they don't get with the times, because they're almost a century old. And let's see, yeah, their engagement is nowhere near BYND. So you can see where it makes a difference. As their engagement goes up, it gets more publicity, more people care about it. Somewhat, it's guerrilla marketing, as you're letting your fans or followers do the marketing for you. We'll check out one more. Sanderson Hormel, who I remember years ago I used to buy their bacon a lot. So, wow. So I stand corrected. Beyond Meat may be actually doing pretty good on the social media compared to their competitors. Doesn't mean that they can't do a lot better, but looks like they're destroying their close competitors in terms of social media presence. They have way more followers, at least on Twitter, and if you have that big of a following on Twitter, it pretty much is going to carry over to the other platforms as well. As you can see, the engagement is almost negligible at Hormel Foods. So props to Beyond Meat marketing team. Doesn't mean you can't do better though. So I wanted to show some recent news. Here we have the incomparable legendary investor and philanthropist, just incredible person all around, Jim Cramer, with his lightning round. Here's his thoughts on Beyond Meat. This was just last week.
You know, I think that for first-time buyer, I just look. I really just care mostly about the franchise. I think the franchise is good. I think that they every day they seem to announce a new market. They had good stores yesterday in the other day in China. Then they announced Brazil. I like Beyond Meat.
You heard it there. Looks like Kramer's a fan of Beyond. But yeah, obviously don't buy just because he likes the company, but it does show you his opinion of the company. Seems like he likes it. Here's Motley Fool's website. Cool motto: making the world smarter, happier, and richer. They have a great podcast as well. I'd highly recommend downloading it and listening to it. Anyways, I thought this was funny that they had an article saying Beyond Meat is not a fad, which directly coincides with Citi saying that they are a fad, but nonetheless, they just have a long article essentially promoting the brand. And here you can see they even got a huge deal with Alibaba, one of the largest companies based out of China. And of course, they have their Dunkin' partnership. Yeah. Here, MarketWatch points out that they have a huge deal with Alibaba as their push to China, where here's some deals that they're trying to make with Starbucks and Yum Brands, which is one of the largest restaurant companies in the world. Yum Brands, by the way, who's KFC, Pizza Hut, and Taco Bell. Sorry if I'm making you hungry. So it's all come down to this. We checked out the fundamental analysis on Beyond Meat. It looked like a high growth company. Recent IPO, has been in the public for over a year now. Seems like almost every month they get a new partnership deal. So, and they're even trying to go global. So it'll be very interesting to see how other companies react to and implement plant-based products, food specifically, into their diets. And then it'll be interesting to see how the younger generations, who it seems like are being more environmentally conscious on the products that they buy, are gonna implement this non-animal based product into their budgets. But I did want to show that I actually had some of this in my freezer. This is the burgers. I've tried them before. They're actually pretty good. You really don't even need sauce. No, I'm not. It's not a plug or paid showing, but I do like the product. At least the burgers. I haven't tried the sausages or the other stuff, the chicken yet. But yeah, I'm not biased on whether I like the product or not, as you should never be when investing in a company. I'd at least give them a try if you haven't tried it yet. Anyways, so Beyond Meat, we'll see how I place them. So I do like that they're a high growth company. No dividends. We don't really expect a brand new company into the public markets to be paying dividends anyways. But they have a very intelligent and well managed company on the board of directors. They have lots of very big name hedge fund managers and investors, and even societies and animal rights activists that are on their side. So that's always a good thing, especially nowadays with the younger generations being so conscious of protecting and preserving life on Earth. But I do really like this company in terms of how much they have so much potential, and how well they're placing themselves in the markets and against their competition. I do like their social media presence is pretty good, so props to the marketing team over there. Although they could do better. I do like that I don't see them pummeling me with advertisements. That's a good thing. Based on all the stuff we reviewed, their news, their management, their effectiveness, growth, potential, competition, I'm going to place them here. I kind of want to place them in the B, but I maybe would place them in the B in the future, maybe even a year from now. But just now, because the markets are so volatile, I wouldn't necessarily want to buy them right now, as they do have potential to drop some. But earnings season is coming up. It would be very interesting to see how they performed last quarter. I do really like the company. If the price drops a good bit, I'd consider as an entry point. And I have a lot of respect for their founder, who even against odds, he still pushed through and showed his passion and dedication for the company. Got them listed public markets, and great company to be working for, I would think, if you do believe in their motto. But thank you so much for watching. stay safe, and best wisely. Peace.